On location from Nassau, Bahamas, it's Smallcap Power's Companies to Watch.
We're here at the President's Club Small Cap Conference, and I'm joined by Shane Downey, who is the CFO of Polaris Infrastructure. Shane, thank you for joining us.
Pleasure.
So tell us about Polaris and what you're doing.
Polaris is a TSX listed Canadian independent power producer, and currently we've got a single operating asset as a geothermal plant in Nicaragua.
What's your growth potential looking like in the next 6 to 12 months?
Well, we think it looks very good. The company just underwent a recent recapitalization transaction. Okay. So net proceeds of $60 million US were raised, and we're going to be spending $30 to $35 million in the immediate term on a drilling program at San Jacinto, our plant in Nicaragua. And that will result in, at the end of the day, 3 additional wells beyond the 8 production wells that we have today.
And what is the investor sentiment looking like at this conference for you?
Well, I think overall very good. We're certainly a well-established and relatively large company. We're not a startup by any means. Annual revenues are $50 million, EBITDA of $40 million, and net free cash flow after all of our debt service and our capital expenditures is in the $10 to $11 million range a year. And we think that with a strong balance sheet and the ability to invest in our plant as well as other potential opportunity in Nicaragua, that we've got a pretty good growth profile.
So why are your operations based in Nicaragua, and how is it like doing business there?
Oh, it's a great question, because we certainly, the most obvious single risk for our company is that we do have concentration risk with a single asset, and that we're operating solely in Nicaragua today. Mm-hmm. That said, so far our experience with Nicaragua has been very, very positive. We're focused in Nicaragua specifically and Central America more generally on the basis that the market dynamics are such that the returns tend to be more attractive than if we're focused solely in North America. Mm-hmm. The government itself has been very responsive and helpful. We've, I think, done the right things in terms of raising a lot of capital and investing in the plants, but we're producing base load power. Nicaragua is very much a developing country still. Electricity and base load electricity at that is critical, and we're a big material provider for them on a national scale.
Awesome. And why should investors invest in your company?
Well, we think that right now is really a compelling time on the basis that the balance sheet has been fixed. There was a situation such that the balance sheet really did not work. Equity holders previously took a significant haircut, but we've got a compelling and sustainable base at this point in terms of our balance sheet, investing significantly in our existing San Jacinto plant in Nicaragua, which, given our cost structure, incremental production mm-hmm. will fall significantly to our bottom line in terms of free cash flow availability. And so with all of that said, we have an ability in the next year to institute a dividend policy, which we think really provides some additional support for the share price.
And what is the one key takeaway you'd like to leave for investors at this conference?
I think it's really that we're at an excellent jumping off point for the company. We're investing presently with equity dollars to significantly grow the company in terms of cash flow generation. We think it's a compelling value today, and even more so once that dividend is in place.
Great. Thank you very much.
Thank you.
For more great companies to watch, be sure to visit smallcappower.com.